Hello and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad, and with me joining my colleague Nandita Khemka. Well, Nandita, once again, we saw a subdued session given that we did have a fairly mixed global handover to start off with. And of course, the market is in search of triggers for a further up move and ahead of the TCS Q1 results, which will be, out in some time today. Of course, but Nifty extended to its second streak of losing streak. And if you look at Nifty levels, below that 25,400 levels as well, that is where the Nifty has slipped, and it was the expiry day, so some of the volatile swings was expected from the market. And Sensex also, if you look at the level, 300 points down coming in from the Sensex too. If you look at from the sectoral perspective, however, Nifty IT index bogged down, some cautiousness ahead of the TCS numbers ahead today, and it saw a cut of about 0.8% or so. On the other hand, Bank Nifty index continued its underperformance, 0.4% cut coming in for the Bank Nifty index also. Autos also was bogged down in the trading session. Nifty Realty, however, that stood out as the top sectoral performer with about 0.7% gains. On the other hand, Nifty metals also, that showed a gain of about nearly 0.5% or so. We did see yesterday that the metal index was bogged down given that Trump had introduced some of the tariffs on copper, which extended beyond the basket of aluminum and steel. So yesterday metal stocks were a little under pressure because of that as well. But today, however, it showed some resilience with about 0.4% gains. However, Nifty Pharma index that stood resilient despite Trump's 200% tariffs or so that he had indicated. Today, it is seeing a little bit of a pressure, and Nifty Pharma index down about 0.5% or so. Broader in the markets, if you look at mid-cap and small-cap indices, mid-caps down for the 5th straight day, small caps after yesterday's good performance. Today, once again, it's succumbed to pressure with about 0.2% cut that is coming in. But yes, Nandita, all in all, the breadth of the markets, if you look at, breadth of the markets quite, is favoring towards the declines at this point of time, and there was some cautiousness ahead of the, large cap IT TCS Q1 results too.
Cautiousness, yes, but I want to point out that the TCS shares, did rebound. In fact, they ended the day in the green with gains of 0.3%. So, who knows? We may be, we may look at a positive surprise coming in from TCS, although expectations are fairly subdued, and we'll talk about that in greater details in just a bit. But yes, as you rightly pointed out, lack of triggers. Mr. Trump is also failing to really move the market, so to say. But until unless we see some details emerge from that mini US-India deal, we will remain sideways, we will remain range bound, although in the second half of the week, we've seen the bias towards the downside, and today, as you mentioned, 25,400 broken, on the downside. But nothing really to worry about, because 25,300 and 25,500 is the level that technical experts have been alluding to, that as long as we are in this zone, we are pretty much safe. But yes, IT, that's one sector that stole the limelight today, but it did recover slightly from the day's low and managed to recoup some of the losses that it was clocking in the first half of the session. But yes, so we are waiting for IT numbers, but on the other side, let's take a look at some of the movers from the broader end of the markets. Then I just want to point out that power financiers were pretty much holding out. As you mentioned, the broader end of the markets were weaker, but they did manage to fare better compared to their benchmarks, So power financiers, I want to mention these two stocks, REC and PFC, given the fact that there was a positive brokerage note. Morgan Stanley has initiated coverage on these two stocks. The stocks ended higher. You also had Home First Finance. The stock clocked in some gains on the back of a positive note coming in from Bernstein, where they have initiated coverage with an outperform rating. LIC, although, was under pressure. June premium data came out, plus there's news flow that the government has okayed stake sale via offer for sale under FY26 disinvestment plan. So that stock was under pressure. The stock was down somewhere around 1% or so. In terms of other movers, on the Nifty 500, defense stocks were under a bout of profit taking today. Bharat Dynamics among the top laggards. Of course, there's a Motilal Oswal note, and we will be talking about that in greater details later. Metropolis Health, that was a star performer yesterday. Today came under profit taking. Solar industries, Pfizer, the stocks from defense pack like GRSC and even Data Patterns, all these were under selling pressure. But what did well were the likes of Kirloskar Oil. That stock was the top performer on the Nifty 500 index, double-digit gains on that particular stock. Acme Solar, Lemon Tree, Campus Activewear. This stock saw good volumes. On the back of that, the stock was doing well. Capri Global is the other one that managed to do well in an otherwise range-bound and weak market. But what were the movers from the benchmarks or the headline indices that did well, Lovisha?
That's right. And if you look at from the gainers perspective for the Nifty 50, if you look at Maruti Suzuki, that stood tall with about 1.4% gains. Other than that, we can see IndusInd Bank also, despite the Q1 business update that did come muted 2 days back, the stock did perform well in today's trading session with about 1.4% gains. Tata Steel also did well with about 1% gains. Yesterday, we saw that Tata Steel was bogged down in the trade given the muted Q1 business update it came up with. But today, it brushed aside all of those concerns, and today it was one of the top Nifty 50 gainers too. Other than that, we had Bajaj Twins, Geo Financial and Trent that also topped the top Nifty 50 gainers. If you look at on the way down, on the contrary, on the flip side picture, Bharti Airtel saw a cut of about nearly 3% or so. HDFC Life with about 1.9% cut. We did see the June new business premium declining for HDFC Life with about 6% on a sequential basis. That is why the negative sentiment played out on the counter as well. Asian Paints seeing a cut of about 2%. Apollo Hospitals and Shriram Finance also saw a cut of about 1% each. But yes, one stock that stood out today, that was your Prestige Estates. That stock gained about 2% or so after the company posted a strong pre-sales update for the first quarter, and that's why we saw a rally in the counter. Now, if you look at the pre-sales data, that jumped about 300% on a year-on-year basis. That was an all-time high figure for the pre-sales data. Sales volumes, that also surged about 234%, and collections also rose about 255% on a year-on-year basis, and that touched an all-time high as well. So pretty much all kind of milestones the company did achieve during the June quarter. So a large part of the momentum for the quarter came from the NCR market, which accounted for about 60% of the overall sales by the launch of Prestige City project, and this marked the company's first foray into the region too. Other than that, the other pie contribution included the likes of Bangalore, which contributed about 21% to the pre-sales, followed by Mumbai at 12% and Hyderabad at 5% too, and other cities at 3% or so. Now, coming to how the brokerages have responded to this pre-sales data, they remain quite enthused about the counter. Morgan Stanley maintained an overweight rating on the counter and gave out a target price of about 1700 rupees per share. The brokerage noted that the Q1 pre-sales came in ahead of the expectations and they were in line with the company's guidance. What they also said was the upcoming listing of Prestige hotel business that could also help ease leverage, any of the leverage concerns that the company might be having. On the other hand, Nuvama also raised its target price to about 2000 rupees per share, and they reiterated a buy call on the counter. What they have highlighted is that the company has had delivered its best quarterly performance ever, and it was because of the new launches and the steady execution that the company has planned. They also pointed out on the healthy occupation levels in both the office as well as retail portfolio. So, Nandita, today the stock did well despite what the weak trend we have seen. And once again, it was up about 55% or so from the April low. So, all in all, a very positive note coming in from Prestige Estates too.
That's true. Positive note coming in on Prestige Estates, and Realty Pack itself was higher in trade in a weak market. But let's shift focus to the IT Pack. That is something that is garnering attention given the fact that it will officially kick off the earnings season today, TCS, Tech Bellwether. We'll talk about TCS in just a bit, but overall for the large cap IT, expectations are fairly subdued and they are expected to underperform their mid-cap peers as well. Demand visibility remains low. Of course, we have the tariff turmoil that's weighing in on global growth, and that in turn could impact IT companies as well going forward. Of course, 4 out of 5 companies are expected, large cap IT companies are expected to report a decline in their revenues. Commentary across the board is expected to reflect, the fact that demand environment may not have improved, but it may not even have deteriorated, which is why more than the headline numbers, it's the commentary that takes precedence. Okay, in terms of the IT top majors and in terms of the constant currency figures, that revenues that we usually track. Infosys is expected to take the lead. In fact, it is expected to see a growth of 1.5% on a quarter-on-quarter basis, wherein rest of the companies, rest of the major IT names are expected to see a degrowth. For TCS in particular, the range is 0.4% to 3.4% decline in constant currency revenues. So that's the kind of uncertainty that's there, and the wide range of expectations when it comes to different brokerages. Wipro is expected to hand in a 2% decline in its constant currency revenue. Tech Mahindra 0.7% kind of a decline in its constant currency revenue. Of course, this is according to the CNBC TV18 poll that I was going through. But for Infosys and HCL Tech, there is a chance that guidance may be revised higher. In fact, for Infosys, it is expected to raise its guidance from 0 to 3% to 1 to 3% or even 1.5 to 3.5%. So either it will tinkle with its lower end of the guidance, or it's going to look at tweaking both the ends of the guidance. Of course, that will be on the back of the recent acquisitions that the company has made. Even for HCL Tech, it could tweak the lower end of the guidance. But in terms of mid-caps, they are expected to hand in much better performance compared to large cap, because most of them have very less exposure to manufacturing. That's also one reason that could contribute to the good performance that is expected from the mid-cap lot. In terms of LTI, Mindtree, Emphasis, Persistent, all of them are expected to hand in revenue growth in excess of or anywhere between 1 to 6%. To 6 to 6.5%, that's the kind of range. In terms of valuations, Nifty IT, of course, is trading very close to its 5-year averages. But also the fact that the large cap names will see are seeing single digit kind of growth. Whether or not these valuations are actually supportive, cheap, that's something that experts, of course, will be better equipped to answer. But in terms of TCS in particular, as I mentioned, the constant currency revenue growth is expected to decline either 0.5% or 3.5%. That's the wide range. But what the company does to plug the gap from declining contribution from BSNL deal ramp down, that's something that the street will be watching out for. Of course, in terms of the margins, they are also expected to decline despite the fact that there will be currency tailwinds, and of course the company deferred its wage hike that it typically undertakes in April. It has kind of deferred that. But despite that, margins are expected to be muted. In fact, BNP Paribas expects margins to be sub 24%. So that's one monitorable. In terms of commentary, of course, we'll be closely watching for management outlook on the deal momentum, client budgets. In terms of what clients are doing or whether they are in wait and watch mode in the wake of the tariff turmoil, that's one key monitorable. And of course, for verticals like pharma and manufacture, how things really pan out, whether clients are looking to spend more, or is the company looking at cost takeout deals for revenue growth. So these are some of the factors that will be watched out for. Also, in terms of generative AI, remember, I think Accenture and TCS, these are the two companies that actually give you color on AI revenues. So whether or not there will be any uptick in AI revenues, what is the outlook on adoption when it comes to generative AI, these are some of the things that the street will be watching out for. So yes, all in all, it is expected to be a subdued quarter, not the kind of strength we usually see in the first quarter for IT companies. But given the fact that we saw a good sharp 0.5% kind of move coming in on the stock in the last half an hour, let's see whether or not there's some kind of a positive surprise when it comes to TCS numbers. Lovisha.
We'll watch out for that, and majority of the experts that I was talking to, Nandita, also, they also pointed out, mid-cap IT firms are expected to fare better than how the large caps are expected to fare. So we can see the likes of Coforge, Emphasis, Persistent Systems maybe doing better than what the large cap players have to showcase at this point of time. And given the current, stock prices of all of the large cap players, all of them, seeing a cut of about 20% or so far this year, it just, shows that the most majority of the IT stocks have been pricing in the worst case scenario. And any of the commentary of the management or any raise of the guidance will be keenly watched out, and that could serve as a re-rating trigger for majority of the IT names going forward. But yes, shifting focus away from IT and to the next stocks, that is your Bharat Dynamics. we did see that Motilal Oswal did initiate a coverage on the counter with about a neutral rating, and they shared our target price of about 1900 rupees. Now, Motilal Oswal did say that it likes Bharat Dynamics' business model and its ability to scale revenues and grow its order book in the current scenario. However, given the current fair valuations, it would prefer lower entry points. So basically, they are seeing steep valuations at this point of time, which is a red flag for the company. Now, what the brokerage also highlighted that the company currently holds an order book of about 22,000 crore rupees, and the prospect pipeline could be increased to about 50,000 crore rupees. So that's a huge number that they are projecting at this point of time. And BDL's revenues, that they have been impacted in recent years because of supply snags and challenges in sourcing some of the key components from Russia and Israel. But they believe now that the issues have been easing, the brokerage expects a recovery in the revenue growth. What they also see as a key benefit is from the upcoming emergency procurement opportunities. We did see during Operation Sindoor, a majority of the defense stocks did rally on the hopes of an increased order book, and that's what Motilal Oswal is also projecting, that from the emergency opportunities and the large scale orders, they could see some good revenue growth going forward. Now, for FY25 to 28, they estimate a revenue CAGR of 35%. So yes, after the rally in defense stocks, it has become quite paramount for all of these companies to prove that they're fundamentally strong enough and hold the rally ahead also. So yes, this is all the stocks we have for today. But yes, so once again, a very choppy session for the markets, for the overall breadth of the markets. So yes, Nandita, will be watching out for TCS Q1 results shortly in some time right now. We'll see whether or not this can actually provide a trigger for any further up move in the markets, because TCS does not provide any guidance, but other than that, we can see what all it can be projected from here on. But yes, with that, we have come to an end of this edition of Closing Bell. It's a wrap from Nandita and me, and thank you for watching.